Hey everyone, welcome back. In today's episode of Portfolio Analysis, I'm going to unveil another one of our portfolios from the 2021 challenge. And we're going to take a look back at the 2020 portfolios to see how they've held up in Q1 of 2021. Just imagine that you're starting your investing journey in 2021, and in the first 3 months you've already had your portfolio cut in half. How would you react to this drawdown? I think that might convince you that investing is just for degenerate gamblers.
Today's retail traders are exactly the same in behavior as their parents were in the 1990s. JP Morgan found that the Robinhood kids, like the traders of the previous generation, were most likely to buy stocks that have the following three traits. 1, stocks that are in the news. 2, they buy stocks that are experiencing abnormally high volume. And then 3, Robinhood traders tend to buy stocks that have recently posted extreme returns. JP Morgan then asked the question, well, what happens if you buy the stocks that become held by the highest amount of Robinhood accounts? It turns out that over the following week, when a stock joins that Robinhood list of the most owned stocks, it does better than the overall market.
Please remember, if you enjoyed this video or any of my research on YouTube or the website, please let me know by subscribing, liking the video, and writing a comment. If you're new here, we have 3 ongoing series on the channel. The first is Portfolio Analysis, where we dig into long-term, mostly passive portfolios. The next is Retirement Planning, where we cover various financial independence and early retirement topics. And finally, we have Stock Secrets, where we dig into active management and trading strategies. As we approach the end of the first quarter of 2021, I thought it might be interesting to take a look at our 2020 portfolio challenge to see how those portfolios have been performing since then. I'm not going to review each of the portfolios in this video again. So if you'd like a detailed analysis of these portfolios, then please go watch the original 2020 portfolio challenge and then come back and watch this update. Just a reminder, I sold all of these positions after the 2020 challenge had concluded so that I could use that money to pay for the 2021 portfolio challenge, which is underway as we speak. I'm using the Google Finance API to keep this spreadsheet up to date, so we can come back at any time of the year and we can see how these portfolios are doing as if we were still holding them. Some things to keep in mind here, these values again are capital gains only, no dividends or bond interest is reflected in this data. As always, the goal for determining a winner is whichever portfolio produces the highest return with the lowest standard deviation. I've added the Sharpe ratio so we can quickly determine which portfolios are in the lead. The Sharpe ratio is a unit of measure that we use to compare portfolio performance. Sharpe ratio above 1 is ideal, Sharpe ratio below 1, not ideal. Notice the weight drifting that's occurred. This is because the holdings that did the best now have the highest weighting. All of these portfolios are supposed to be rebalanced at least once every year, but we're not going to do that. We're just going to simulate a regular investor who bought a portfolio and just holds it. If you want a static copy of this spreadsheet, I'll post one over on my website for you to download. Remember, in the 2020 challenge, we had some real crazy results that year. Remember that the couch potato shocked us with that victory, so let's start there. We can see that its return has dropped from 15% to 10%. And those long-term treasuries that we were so impressed by, well, they're getting handily stomped by the S&P 500 now. Interest rates are rising, and that's very bad news for treasuries, especially long-term treasuries. So we're going to have to watch this throughout the year and see how it plays out. Can treasuries make a comeback? Well, we'll have to see. Still pretty good performance though. The Sharpe ratio is above 1, and it's providing a better risk to reward than its benchmark, the 60-40. So are there any surprises yet at this early stage in the year? Not really. The 3 portfolios we picked that were individual stocks, they're still getting trounced by their benchmarks. In all of these cases, you'd have been way better off to just buy the ETF benchmark instead of picking stocks. At this point in the race, it's really between the mighty all-weather and the golden butterfly. The all-weather is a damn beast when it comes to protecting capital. If I came into a large sum of money that I wanted to preserve and grow steadily over time, I'd pick the all-weather portfolio hands down. The golden butterfly is producing a higher return so far, but it's doing it at a marginally more risky rate than the all-weather. Alright, so that's what I've got to share regarding last year's challenge. Be sure to stay tuned for details of the 2021 challenge, which is currently underway. You'd think from all the media coverage that this Robinhood Wallstreetbets situation is something new, but it's not new. Wallstreetbets has been blowing up the financial system for years. Or at least blowing up Robinhood anyway. Back in 2019, a user named Irony Man spent a few days bragging on Wallstreetbets about how he discovered a new type of option spread that, quote, literally cannot go tits up. And, of course, you guess what happened? It blew up in his face and created a 2,000% loss. He managed somehow to lose $300,000 worth of Robinhood's money, even though his account only had $5,000 in it. Then, a short time later, in 2019, we had the infinite money glitch, which is where a user figured out how to turn his $1,000 account into $1 million of leverage. Then, more recently, in 2021, we got the infamous GameStop short squeeze, where some Reddit users observed unethical short interest in GameStop and exploited it by flooding the market with out-of-the-money call buyers, which did ultimately end up triggering a massive short squeeze. Anyway, the point is, there's a lot of brilliant and mischievous people on Wallstreetbets, and up until this recent debacle, the majority of them use Robinhood to do their trading. Robinhood used to provide this API that you could call to gather all kinds of data about the trades occurring on their platform, and people in the know began using this data to front-run the Reddit traders. It was actually a super profitable edge, and it really sucks that it's not available anymore. So, in honor of robintrack.net and the other websites that used to provide access to Robinhood retail trading data, we are going to create a Robinhood portfolio. This portfolio is probably going to get killed long term since we're basically just guessing now, but here are the stocks that I picked. Apple, AMC Networks, AMD, BlackBerry, Facebook, GameStop, Nokia, Plug Power, Square, and Tesla. Now, I picked these stocks from Robinhood's top 100 list. I didn't really use any criteria other than checking to ensure that there was some data that I could use on Portfolio Visualizer to get the metrics that we want for our challenge. Here's the performance data over the last 3 months, December 2020 through February of 2021. I added the ARK Invest ETF and the Vanguard 500 Index Fund for comparison. These numbers are absolutely insane. I can't remember ever analyzing a portfolio that had anything close to this level of risk. I typically recommend that people cap their risk around 18 to 20% standard deviation, so I don't even know how to react to a 570% standard deviation. Just imagine that you're starting your investing journey in 2021, and in the first 3 months you've already had your portfolio cut in half. How would you react to this drawdown? I think that might convince you that investing is just for degenerate gamblers. This portfolio returned 1,500% returns in excess of the market. That's just bonkers. In any event, that's your 2021 Robinhood retail portfolio. If we take a sneak peek into this year's 2021 challenge, as of today, we can see that this portfolio is up 72%. We'll just have to wait and see how well it stands up to all the other contenders throughout the year. I've got my suspicion that this thing is going to come crashing down, but it's only March, so let's see how it goes. I've had several people ask me why I've slowed the pace of content uploads on my channel. So let's do a little insider trading together. Feel free to use the timestamps below if you'd prefer to just skip ahead to today's video and you're not really interested in a channel update. So here are the YouTube analytics for this channel. I started uploading in September, really just trying my best to learn how to make videos and how to build a small audience. As we approach Christmas time of 2020, notice that the channel goes parabolic. It's like my channel's become a meme stock or something. It's exciting and it's motivating. Then, all of a sudden, at one point in early January, over the span of just a few days, the views crash back down to earth, and I go from getting about 2,000 views per day every day to about 150. As I record this, my daily view count is basically where it was when I first started my channel, and you can imagine that's pretty demoralizing. The month-over-month performance is terrible. Views are down 76%, watch hours down 73%, subscribers down 70%, impressions down 80%. You get the picture. So looking over all the data, I've got to conclude from these metrics that my videos just aren't very good. Or maybe they're just not reaching the right audience. I don't know. But as you can imagine, these videos take a huge amount of time to create, and nobody wants to feel like they're wasting their time. So when I ask you guys, the viewers, for feedback, this is why. And it's why I've slowed the pace of uploads. Basically, all I'm trying to say with this is there's so much amazing content being created on YouTube right now by small creators like myself. If you watch a video from a creator that you really enjoy, that really resonates with you, please let that creator know by leaving a like, commenting, or subscribing to their channel.